As the bear market itself drags on, are there any indicators, I wonder, to watch that could potentially signal a bit of a turnaround?
Two that I find also from the the 70s. Um, there's an old indicator by Stan Weinstein. It was called the last hour indicator. And he basically said that the market opens up, it's got a lot of noise and trading back and forth, people responding to the earnings or economic numbers in the morning. And then trading kind of takes its own kind of a neutral path during the day. There's day traders in and out. But in the last hour is when Weinstein reasoned that professionals make their move. Okay, these are the people that either want to get out or get in for overnight. They're no longer day trading, but they're going to hold it, long or short. And so we tracked the net movement of the Dow in the last hour and compared it to the Dow. Now it doesn't get reported. So let's say on tonight's news, they'll say, the stock market rallied for the second day, and the Dow or the S&P closed up X points. What's missing out of that report is what happened between 3 and 4. Let's say at 3 o'clock the Dow was up 200 points, but at 4 o'clock it closed up 100 points. Well, it's still closed up, and that's the end of the story as far as the news report is. But the beneath the surface, the Dow gave up 100 points late in the day. Somebody wanted to be less long and didn't want to have a position over the weekend, okay, or less of a position, or they wanted to be more short. So the Dow went up, from close to close, but underneath the surface, it lost ground late in the day. So as I'm looking for a low in the first quarter, I'm going to be looking for the Dow goes down 300 points, but it came up 100 in the last hour. And it came up 100 points in the last hours. People wanted to cover shorts or nibble and do some buying. Fundamentally driven investors will buy into weakness, into adversity. Technicians want to buy in the direction of the trend. So that's a subtle indicator I'll be watching for in the next 3-4 months. And it's easy enough for someone at home to do that. The other tool that I would focus on is within the 11 sectors of the stock market, you really need 6 or 7 to be going in strong positions. They need to make lows and start to improve. And within those 6 or 7 sectors out of 11, you need about 40% of the stocks to have made their turns. So you can't launch a new bull market on 3 sectors. You can't just do it on energy and healthcare, okay, and something else. You need 6 or 7 sectors, and you need them to be on 4 out of 8 cylinders, okay. So that's what I'll be watching for in the first quarter to hopefully help identify a buy and a hold for the next 18 months.
I appreciate that context there, in that the simple day of reporting at the close, Bruce, does not necessarily tell the full story, especially with regards to a bit of a late day pullback or a movement to the contrary. There's always a bit more context and perspective that is worth closer examination. So I appreciate that point.